Hello and welcome to today's Stock Watch. So, with the recent talk of a potential vaccination to be greenlit before the end of the year, Pfizer are reportedly 2 months ahead over coronavirus competitors according to analysts. The conviction comes after the head of the COVID-19 Prevention Network shared the development timeline and progress of COVID-19 vaccines developed under the White House's Operation Warp Speed agenda. Other vaccination developers have seen their phase 3 trials halted due to medical concerns. In other news, chipset maker Qualcomm is reportedly working on its own timeline of gaming smartphones, which could arrive by the end of this year. As per tradition, Qualcomm released its new flagship chipset in the month of December, and the invitations have already gone out. But this year, the company seems to want to jump on the bandwagon of the mobile gaming market, which could be an immense boost to its share price overall. Details are in the infancy. As we move closer to the Snapdragon event, further information will come into fruition. So it'll be an interesting look into the volatility of Qualcomm shares leading up to the event on December the 1st. So I want to take a look at Pfizer first of all today. So what we've seen over the course of the year is the V-shaped recovery that's been halted roughly about the $39 range. And then we've seen another potential V-shaped recovery, which again has seemed to hit a slight double top roughly about this area. So I'll just zoom in a little bit closer to the current events, and I just want to take a small Fibonacci from the recent lows to the highs. So what I'm looking at the moment is when the market opens to see if we can bypass this 61.8 region, which is just roughly over the $36 range. If it cannot, if it does find some resistance for whatever reason, then I fully expect prices to start faltering and falling lower to these support levels that we've seen in the previous week. So roughly about the mid $35 range. However, if it can bypass this particular area and push prices further into the cloud to reach the top, then we could see potential to revisit previous prices at the beginning of September. So I'll be looking at that when the market opens later today. So a quick look on the Qualcomm chart as well. So what we've seen over the course of the year is a very good recovery despite the pandemic, which has reached record highs at the beginning of September, and now there's another attempt at the moment. But what I've seen on the momentum indicator is a slight bearish divergence, which could mean that there is going to be some resistance felt at the top again. So I just want to put a quick Fibonacci in just to see what the levels are and zoom into the relevant area. So if we do see some resistance at this area, which is quite possible, then we're looking probably at more downside at this same pattern that we were seeing at the previous month. So if prices can hit the top of this cloud, which is roughly about $116, then I fully expect it to be engulfed and possibly drop lower to the 78.6 region, roughly about the $110 range, which is where we saw prices at over the last few weeks. So I'm going to just put in a line here, which is quite a good confluence of the said 78.6 region. And as we approach the chipset event on the beginning of December, then we can see if it's going to be a success with the smartphone gaming application or if it's going to tank a little bit further. So this is what I'll be looking at in the short term and over the next couple of months as we go to the end of the year. So that's all from me today. Thank you very much for joining me. And if you have any comments, please feel free to leave them on the post and I'll get back to you as soon as possible. Have a great trading day ahead. Bye for now.